San Francisco's Kindred Ventures. Well, it's raised $355 million in new funding. Its latest deep tech robotics-focused funds. Look, Kindred was early into the AI market. Remember, back in 2022, a $200 million fund has now become a $1 billion gross fair market value as of June 2026. The fresh capital now is coming as the firm's previous vintage has hit the top 1% of its class. Let's get to San Francisco. Let's get to Kindred Ventures Managing Partner and founder, Steve Jang. Congrats, Steve. Look, you were an angel in Uber. You're still a man who thinks about being very early in companies. How is that going to look with this new raising of funds? How early do you have to be in this market environment?
Yes, and thanks for having me back on Bloomberg. Great to see you. You know, early stage feels sometimes like a dwindling breed in this day and age of huge late stage pre-IPO rounds. But we think it's absolutely not only still important, but actually even more important in this day and age of really fast growth and even increased ceilings on valuations. And the reason why is that at the early stage, we're able to help accelerate these companies and these founders through these new technology frontiers in a way that later stage funds aren't really well equipped for. And so we want to continue to focus in on the early stage and help that transition for companies from 0 to 1.
0 to 1, and now we get the ones, and now we get the hundreds and the billions and the trillions. When we're thinking of SpaceX, which is also an AI company, when we think of what's coming in terms of Anthropic and OpenAI, what does that mean for some of your portfolio companies? Particularly when you've got a Perplexity, for example, which admittedly at the beginning we were thinking was one of those sorts of like frontier models, but how are they thinking about this moment?
Sure. I think Perplexity's transition is really telling of a lot of other companies in the space like Cursor. Where, you have frontier labs that are slowly moving into the application layer of AI, but also dealing with the compute constraints that they have today. I think on the demand side, which we're seeing booming right now, demand is far outstripping supply on the data center and GPU compute side. And you're seeing that in the stock market, you're seeing that in all of the inference platforms out there like FAL and Base 10 and Modal that are seeing phenomenal growth. What is happening is that agents, applications and agents, whether they're embodied agents like robots or virtual agents, like what Perplexity Computer offers, are driving this token demand from AI infrastructure today. And so in that way, people are finding their layer, their focus. In Perplexity's case, they are building out a harness that is multi-model, agnostic to models. And in some cases, you see a company like Anthropic with Claude Code, which is building out a single model harness. And so what you'll see is a battle and a competition between who is providing the state-of-the-art models, who is providing the state-of-the-art harnesses, and then who is providing the most performant and productive agents, whether those are robots, autonomous vehicles, or virtual agents used by knowledge workers.
So I can see where the focus is going, because really 2022 is when you went all in on AI. You're continuing to do it this latest round of funding. But it's interesting that I think of you as having success from an IPO perspective, like from angel in Uber to exit, from Coinbase to exit when we think of Reddit and others. But also you've had success in M&A. Is that still going to be a playbook when we think of Play AI, for example?
Yes, I think what we're going to see over the next year or so is that we're going to have an IPO market with SpaceX and Anthropic and OpenAI and Databricks really open up. But what we're also going to see is that a lot of these public companies are going to be very acquisitive, right? And obviously, as an early stage investor, we want our companies to go all the way, stay independent, be founder-led, and eventually go public as a platform globally. Now, what the reality is that there are a lot of companies out there acquiring companies that will help them accelerate. So a lot of the companies of the last cycle that are publicly traded today need to catch up, need to transform into the AI cycle as well. And so they'll do that through acquisition. And so we're mindful of that energy and dynamic happening. And obviously, we continue to guide our companies on both scenarios, but we want them to go public.
Now, you talk a lot about guiding and how you've been doing that for a long time in a lot of these big businesses. Is that what gets you in at the check level at the moment? Because it feels as though these mega funds who are raising billions are then coming down to want to pick out at the seed level too. How do you manage to get in and keep the hustle and the muscle?
Sure. And, we think that early stage investing is very different from all other stages as a group in venture capital. And the reason why is that we're investing in founders first, and we're investing in a product vision. They may not even have a product yet when we actually invest. And so we're helping them with product development, technology roadmap, building a team. All of these things are about getting to that first customer, that first traction and revenue. And so that's just a very different daily, weekly exercise of advice and coaching and acceleration that I think a more finance view later stage investors get to receive that and then take that and help accelerate their growth from there. And so there's a nice symbiosis between what we do in early stage and what a lot of the industry is doing at the later stage.